get a lot of questions on student loans. So let's say, for example, you owe $100,000. How does the lender view that? So if there is zero payment, okay, if there's a payment already on the credit report, that's what we use. If you're an income-based repayment program, that's what we used if we can document it. But if it shows zero on a FHA loan, let's say you owe $100,000, they are going to use a formula of 0.50%. So if you take that number, divide it by, or times it by 100,000, your monthly payment, the lender has to count against you is $500 a month. On conventional, they use 1% of the outstanding balance. So now we're having to count $1,000 a month against you. Now, do you have to pay those payments? Absolutely not. That's just what the lender is estimating that your payment worst case might be. Your payment might actually only be $150 one day, but for our purposes, the lender is advised, and that is the guideline that we have to use. Now, VA is a little bit more forgiving. They let us use 5% of the outstanding balance divided by 12. So in that scenario, we would count $416.67 against you. So just know, if you think, oh, well, I don't have a payment on that, that does not mean anything on our end. We are gonna have to count against you unless there's a payment already associated on the account on your credit report, or in some cases, if you can prove that your parents may be paying it and you can show 12 months proof, or that there's no payment on VA for at least 12 months that's been deferred. That's about the only way we can exclude it. So I hope this helps.